All right, welcome to today's stock market update. And today we're going to talk about the $1 trillion coin idea. Is this genius or the worst idea ever? And we're still in our makeshift studio here in Clearwater Beach, Florida, with our mastermind. And with me in the studio is my head coach, Mark Hodge. Hey, Mark.
Hey, Marcus.
Okay, and we just want to make sure that the sound is okay. Okay, because we just, as we plugged it in, had a problem with the sound. So we want to make sure that this is good as we are talking about the $1 trillion coin idea here this morning. So I'm just waiting for the thumbs up and then we can get started. But let's already switch over to the markets to see what is happening here this morning. And markets are up. Okay, and we are good to go. Okay, so Mark, uh, let's just talk for a moment because this $1 trillion coin idea is kind of, is it a crazy idea? So let's talk about what's happening here with the debt ceiling.
Yeah, so I mean, we've talked about the debt ceiling, and I mean, it's really a political play at this point. For the most part, traders don't think that politicians are going to say, screw the economy, screw everything. We're okay with downgrades, but it came close in 2011 when actually it was so close to having a debt ceiling issue that the S&P they downgraded the U.S. You know the rating was downgraded.
Yeah.
Sorry. So it looked like we were getting into that situation again, and there was some positive but temporary news. But aside from what happened yesterday, this $1 trillion coin idea has been floated around. Started back in 2011 with Obama, and it's been creeping up again recently because of the stalemate.
Yeah, so let's talk about this. So here's this crazy thing. So in 2001, legislation enacted a law that, or yeah, anything. So it is possible that the Treasury can mint platinum coins of any value without congressional approval. And it's important that it is platinum because under congressional approval are all the other coins like gold, silver, paper, obviously, nickel, bronze, copper. So it has to be platinum. So in theory, what could happen right now is that President Biden could actually order Treasury Secretary Janet Yellen to have a coin minted with a value of $1 trillion and then deposit it right into the treasury. And therefore, the government has an extra $1 trillion to cover debts and prevent the default. So this is the crazy thing about the $1 trillion idea. Yeah, and Mark, and as you said, it was actually, I mean, in a podcast, Obama said that they thought about the idea of the $1 trillion coin in 2011 when we had a government shutdown.
Yeah, and so they were tossing around the idea, but it sounded like, uh, at the very least, it was taken more seriously than some considered. And it's one of those things where by depositing the coin, it instantly gives the U.S. the ability to access that cash, right? But there's this overlap, and whether or not you like the Fed or you agree with the Fed, the idea is that the Fed is neutral, right? And so their control of monetary policy is neutral, and if all of a sudden a political party starts, making platinum coins where paper, dollars and gold and silver, the quantities approved upon, it kind of throws things off. And you also have huge concerns over hyperinflation. So this is something that's being tossed around. I'd love to see what a trillion, I mean, I like coins anyway, so I'd love to see what a $1 trillion coin looks
Well,
like. It'd be
let's take a
fun.
look at this. There's some speculation because it doesn't exist just yet. So here I just did a Google search for $1 trillion coin of what this might look like, and you see that there's many ideas here. And you see the point is, it doesn't really matter because the outside world would never
Yeah.
ever see it. So the coin would be minted by the Treasury and then immediately deposited into the Fed. So therefore, it doesn't matter. There were some funny ideas though, because it is kind of an absurd idea. So one of the ideas was that to put the picture of Charles Ponzi on there and say, well, there's just a big Ponzi scheme. Or another idea was to put a big hole into the coin of saying, well, this is the hole where all the money appears. So anyhow, this is where we stand with this coin, and nobody knows what this looks like. And I don't think, I mean, Treasury Secretary Yellen just said this is a pretty bad idea,
Yeah,
when she
yeah,
went
and
on
she should
record.
know.
Yeah. But hey, let's go to the markets because we did have some good news regarding the debt ceiling. And if you look at the markets yesterday, when we heard that there might be possibly a deal, this is when the market started turning around. We're looking at the S&P 500 yesterday. So we opened way lower. We're diddling around for most of the morning here in negative territory, but then the S&P 500 turned positive yesterday when there was rumors about a potential deal.
Yeah, Senate Minority Leader Mitch McConnell, he offered a short-term suspension proposal to Senate Democrats. It looks like they're gonna go with that, and that would basically delay the concerns until December. So the October, I think it was the 18th deadline that people
Yep.
were worried about. That shouldn't be an issue now if everybody agrees, and then there will be a topic until December. Fun stuff.
Yeah, and the markets are liking it this morning. So here we're looking at a 5 minute chart of the S&P E-mini S&P futures, and as you can see, they have just been going higher and higher overnight. Right now, they're pointing to a higher open of almost 1%, 0.95%. Looking at the Nasdaq, higher open of a little bit over 1%. The Dow lagging a little bit, but 0.91%. So it seems that we are opening in positive territory here. And I mean, it's not only those news that we had this morning that pushed futures higher or the markets higher. We also had some good news from the employment front or unemployment front, whatever you want to however you want to look at it.
We did. Unemployment claims last week came in at 326,000 claims. So, 326,000 Americans filing for first-time unemployment. It still sounds like a lot, but it's the first time in 4 weeks that we've actually seen a decrease and also lower than expected numbers. So the forecast was around 350,000 claims, the 326 coming in lower than expected.
Yeah. And the big one, the big economic report this week will be the unemployment report. That is the monthly unemployment report. This time for the month of September is being released tomorrow morning, and all eyes are on this because, as we know, the Fed is talking about tapering, scaling back its bond buying program, raising interest rates, and there's two things that the Fed is looking for, and number one is inflation. I talked about this in previous stock market update, and the other one is employment as high as possible. But Mark, let's talk about inflation and all this supply chain management stuff that has been floating around here for a moment, because we did have the first earnings being reported yesterday.
Yeah, I saw two things that were positive. We could talk about Levi Strauss to begin with. They reported earnings that were better than expected, coming in 48 cents per share, which better by 11 cents. Also beat revenue, and they raised their outlook. Now, there was some concerns that retailers going to continue to report higher costs and supply chain issues, and that was something where Bed Bath& and Beyond, I think it was last week, they reported and had huge concerns and kind of sent the retail, sector into a downward spiral at least temporarily. So Levi was positive, raising outlook, and they said that they really benefited from the easing of pandemic restrictions, where people were interested in buying clothes to refresh their wardrobes.
Yeah, and this where it's so interesting because you mentioned it, Bed Bath and Beyond when they reported last week. I mean, they actually had some concern that well, it's not going well, so they reported worse than expected earnings, and they really lowered the outlook. And I said it sent all retailers down. So this is why right now all eyes were on Levi and see what do they say is Bath and Beyond. Well, just being Bed Bath and Beyond, or is this? I don't know, an indication of things to come. And right now, it seems that with the reports from Levi here yesterday, seems that yeah, the fears are a little bit at ease.
Yeah, yeah. Another one, Marcus, Conagra brand CAG.
Okay.
So I thought this was interesting because we started to see this trend, at least this blame on higher costs and supply chain issues, and I don't think that's gone away. But they reported earnings. They're the company that includes Healthy Choice, Hunt's, Hebrew National. They earned 50 cents a share, a penny above estimates, and revenue came in better than expected. But they said that they expect to deliver on its full year targets despite inflationary pressures. So here we have a narrative where they're saying, "Hey, we understand the inflation impacts, but we expect to do better than that." And if that becomes the new trend, that could be huge for earnings. I know that earnings are expected to be, coming out better than expected. A lot of companies raise guidance. We might do a session on that because there are some interesting numbers, but that could be a positive if that's the trend.
Yeah. So let's just see what happened here this week. I mean, this week has definitely been a fun week, also in terms of trading. So here we had, what was this? This was Wednesday, Tuesday, Monday. So here are the last three bars, and just a little bit all over the place, pretty much since last Thursday. I mean, it started where we are right now, just in a tight range, and it's an up bar, it's a down bar, it's an up bar, it's a down bar, and it doesn't matter whether you're looking at the S&P 500 or the Nasdaq. So right now markets are definitely super nervous. I mean, September has a bad reputation for being a down month, and September did not disappoint. I mean, markets were down in September, but October has a reputation for being a very volatile month, and thus far, October is not disappointing. And why is October traditionally a volatile month? Well, first of all, we have earnings coming in again, obviously. Then number two, I mean, Mark, what we just mentioned earlier, the debt ceiling, this is going on pretty much every single year in October, right?
That and I mean, historically, you have the 29 crash, the October '87 issue. So there's a lot going on, but typically it's a month that finishes higher. So we'll see if that's the case.
However, even if it finishes high, it will be very volatile. Let's take a look at the VIX here. I mean, the VIX has also been higher than normal. We talked about it the other day. The VIX used to be, this is the volatility index, the fear gauge here. It used to be in a range of anywhere between, I want to say, 12 and 18, right, Mark?
Yeah.
And it seems that recently we are more between 20 and 24. So definitely heightened volatility, which we have seen in September and also going into October here. But we like volatility, don't we, Mark?
It's good for traders. It's good for traders.
It's good for trading. It's good for our position. It's good for trading the wheel strategy. And the positions that we put on this week are doing really well. So we have AMAT, which this morning in pre-market trading is up 1.87%. We did trade ARKK, which in pre-market trading this morning is up 1.5%, and also Blackstone, which in pre-market trading is up 1.4%. And even the positions that we had in the portfolio here for a while are doing pretty well here this morning, up 1.3% in JWN, LVS 1.3%. And then, of course, we have our friend Wright, a little bit all over the place, but also up 2% here this
Woohoo!
morning. So we'll see. It will be a fun day to trade, and can't wait here to trade live with our mastermind who are with us in the room here, patiently watching us as we are in our makeshift studio. Anyhow, y'all have a great rest of your day, and we'll see you in tomorrow's market update.
Happy trading, everybody.